All right. So I'm coming back and I realized that I haven't really discussed anything in regards to like me, my journey, anything of that nature. And it's just like straight into uh just basically proof of concept testing, forward testing, something that I've already back tested, something that I've already, and then, or something I've already back tested, something I already know that I've found success in, but I just need to continue to build the trust and confidence in it, as well as the discipline. Right off the rip, if you're new to trading, I've been trading since about September 2018. I came in on a particular program that was meant to teach you how to trade, but they more focused on referrals and getting people underneath you. So if you're familiar with that, then you know what I'm talking about. Um, and then from there, I've come underneath a few different mentors. Um, and if you don't have a mentor, then I recommend that you get one, but it's not necessarily needed, um, because the more you dig into this, the more you'll realize that trading is unique. A lot of different styles out there, a lot of different strategies, and the one thing that is consistent on all the strategies that work is that they work. That's it. It doesn't matter if somebody's doing some sort of smart money order block, somebody's doing support and resistance trading, somebody's doing trend line, EMAs, indicators, whatever it is. If there's a strategy out there, um, you just got to find out what works for you. You grab a strategy, you write down the rules to it so that you can stay disciplined to it, and you aren't just hopping all over the place. And then you test it. And so, very similarly, the way I've been testing or forward testing the proof of concept for the candle formation is very similar to how you do it. Although you do it in historical data, you can for sure forward test as much as you want without having to do historical data. But it helps build that confidence if you can see it happen in the past. Although it's not actually guaranteed to work in the future, but you have a higher probability of it working in the future if it's working in the past. So by doing this, by taking the time, you'll be investing in yourself. You'll be building your own confidence, and helping to strengthen your decision making. Um, so I thought I'd go through um, sessions of basically how to backtest. Very much like I've noticed that how candles form, and there's a few other people out there that have talked about candle formations and the way that they go. I was like, okay, cool, let me test that. So I put together a small little trading strategy, some rules around that, so I can go back and back test it and have worked it. And then you just go through and you optimize, you tweak it to see, maybe you want to increase your amount of trades, or maybe you want to decrease some of the noise in your trades. Maybe you realize that some particular setups don't usually pan out as much as others, and so that's one way to do it. So for back testing, one thing that you're going to need is you're going to need some sort of uh, platform to use. And so TradingView is a perfectly good tool out there. It's free to use. You sign up. I think they have some ads every now and then. I have the paid prescription, but it's not necessarily for you to get the paid subscription. The other thing that you'll need is a journal. You need some way to track your trades. And so Google Spreadsheets is a good way to do that. Depending on what you're, I mean, the tracking mechanism that you need can vary depending on your style. But if you would probably need something that you can definitely easily look back upon and compare. So you'll definitely need some sort of journaling method. Like I said, Google Spreadsheets is a free way to do that. There's plenty of other areas out there. There's some trading journals out there that are possibly free. I've never looked into that. I've always done everything on just spreadsheets, so it just makes it easy because I can do it pretty much on any computer. TradingView is accessible online, and Google Spreadsheets also accessible online. So it doesn't matter if it's even my computer or not. You don't need to download any extra software or anything like that. It's just ready to go as long as you have internet connection. So as I was saying, trading is a unique. There's many different ways to do it. The idea is to take a concept and just run through the back testing to see what works for you. We've already been seeing through some of the sessions that that I'm doing the daily 30-minute as my proof of concept for candle formations. It's just building that confidence in myself and my decision making. So let's get started. I want to run you through like a back test of how you can back test and things of that nature. So one of the very basic strategies out there is support and resistance. And then one of the most basic and easiest entry patterns or candlestick formations is called a double bottom or double top. And so I was going to run through. And so basically, you want enough big of a sample size that you can bank that it's more than likely to work in the future. So you don't want to start off too small. Generally, a lot of people who have tested and back test particular things usually start off with a sample size of about 100 different trades. 100 different trades will give you a little bit of understanding of how a strategy will operate over a period of time as well. So we're going to do this. I'm going to try to be as completely as random. I think I have 28 pairs that we can look through. 28 pairs we can look through. And so I will randomize and figure out, we're going to go number 14. So 14 from the top. So we got 3, then 6, 9, 10, 11, 12, 13, 14. Euro NZD will be the pair that we look at. I will clear the chart. And then the 2 time frames I'm going to use, I'm going to still stick with the daily time frame and the 30-minute time frame. So I'm still going to do a 2 time frame strategy. I'm looking for zones of support and resistance, which you can look that up on Baby Pips. You can look that up on a bunch of different websites to learn support and resistance. And I'll probably go over a little bit here as well. But let's see how many days we need to go back. So then we'll be dropping down to let's figure out 14 days. 1 day? No, we need to do a little bit more than that. Come on, do it again. Really? How random are you? 4. I'll scroll back 4. 1, 2, 3, 4. Replay tool on. Figure out where we're at. Reset the chart. And we are back in June 2019. So we'll start here. And so basic understanding of support resistance is you look at the chart, and any place you can pretty much see a strong V-shaped bounce from where the price has happened. So you want to start at the highest and start at the lowest. So if you had to start, you would have a particular area up here. And if you had to go at the lowest, you'd have a particular area down here. Now, one thing that you've got to either start setting for yourself, you can either start with some really hard pressed rules, or you can come with the understanding that they're zones and they're just areas that you're going to be eventually training your eye to see what price is doing in those zones. But one way to set a set of rules for zones is for the highest peak on the daily, come to the body of the highest candle and the wick of that highest candle. And that will be your starting zone. And you won't go anything lower than that. So that'll be that zone up there. For down here, we get roughly the same thing, except we're going to be starting way over here. Let's zoom into that now. Lock it up right there. And then that should be the highest point or lowest point. So there's our 2 zones. and drag these out to the future. Now they're out to the future. And so you could have zones in here as well. The main thing about support resistance is you want to see consistency on how they react. So if you were to have seen this area as a resistance at one point in time, support another point in time, and you drew some sort of zone in that area, it would make sense until you got to where we're at today, because now it's no longer respected. So if we had come back and we were testing and saw that back in December of 2018, price was coming up to this zone here, we would have our zone fit by our rules, whatever those are. Once again, I'm going the lowest wick to the candle body, and then we drop down to a lower time frame and see how price responded to in the zone. And would we've gotten an entry? Don't know. So now that we got that, we have our zones, both high and low. And so we're just going to fast forward this to see how price gets there and responds. The beautiful thing about rules is you can not be so concerned about being precise on this back test, because as long as you are very, very honest with your rules and your sets, then you can't fake it. So the rules for a double top, very simple. Price will come up, bounce away from the zone that we're looking for, come back again and retest the area of the first top. So once that happens, then our next candle will be the entry. So a double top, just for quick reference, if this zone was bigger and this area was the zone we're looking at, this is the first test. Price pulled away, came back and tested the zone between the body and the wick of the first test without closing beyond. And after the first test, we would have gotten in there. As soon as we got a wick rejection into that area, that would be our entry, with stops above the wick area. You can use a set stop. So that's 30 pips roughly. So if we do 10 pip stop, it would be 40 pips. And then whatever your target is, 1 to 3, 1 to 5, 1 to whatever right now you're doing a lot of concept testing. So it's like, okay, how far did this go? Given that stop loss parameter, how far did this go? This went 3.64. So a 1 to 3 is valid and would have been hit. And so you just annotate that on the journal and then continue going. So unfortunately, though, this was nowhere near the zone. And so we cannot count that. Just showing you what a double top looks like in my eyes. So now that we have that going, we can look and see and be honest, it never happened. It came into the zone and then broke up through it and never pushed away and never came back. So hence the reason why we can let it play out a little bit without being concerned that we've missed it or that we may skew the results. Now that we have prices broken up, this is still a valid zone now. Let's see if it's respected if price ever comes back. And because we don't really have anything else outside this area, then these are just the only zones we're working with. See, price comes back to this area, drop back to the 30. Price came here. Now see, this is a particular zone to show you to start looking. But the question is, how rigid or structured are you going to be as far as price staying in the zone? Because if you go with the original just what a double, so a double bottom would be the inverse of a double top. So the same thing, the first test, we're waiting for a push away and then a retest. Depending on what's your eyesight, depending on your rules, you may have seen a double bottom like this. Getting stuck. Go away. So you may have seen double bottom like this, in which case your entry would have been up here. With a 10 pip stop, so 76.86. Beyond there, and then whatever your stops or targets are. How far does it go? Who knows? It looks like it went quite a ways. That could have been your entry. Another viewpoint could just be first bottom. Don't count that wick area because it's whatever your reason. Maybe it doesn't look like a double bottom to you, but this next one does. And that would have been your entry right after that red candle, or that down candle, which is dark gray on mine. You would still have a 10 pip stop beyond the wick. So we're at roughly 10, so it'd be 20 pips, roughly about there. And then whatever your targets are. So there would be your entry for that. So back testing is just consistently going back and forth like this. You can start off, if you can start with 20 trades, and through 20 trades see that it's find out how successful it is to get a win, given like a 1-to-1. If you risking one, you want to at least be able to make one. That way you have to have a just slightly greater than a 50% win rate in order to be profitable. So if you just start with a 1-to-1, how many of those 20 trades would have been successful? And then if you've taken into consideration, okay, if most of my trades I shoot for are 1-to-2, which then gives you like, you can have a 40% win rate and still be successful. 1-to-3, you can have a little over 33% win rate and still be successful. The higher the risk reward ratio is, the less you have to be right in order to be profitable. So this is just one way to test all this stuff. Write it down in a journal and then keep track of it. So hopefully that pretty much explains at least a little bit of that. I think I want to go in a little bit more detail just because I want to be able to say teaching somebody else something is the best way to shore up that knowledge within yourself. Sometimes you don't realize how much you know until you have to teach somebody else that same thing that you know. And so I'll probably be doing some training tutorial videos. I don't know what to call them, on basically day trading, because that's pretty much what I'm going for. Like I said, I've been trading since 2018. I've had some success with it. I have yet to make it my full-time job, but that is the ultimate goal, is not to necessarily make it my full-time job, but to supplement my income, supplement my time, so I'm less required to work my full-time job. I would like a little bit more freedom to take a trip here and there and not worrying about having to work a 40-hour work week. To know that I could every, I don't know, other month or so afford a 3-4 day work week or a weekend getaway, and my income not suffer because of it, because it's not where I got that money from to begin with. So that is my goal right now. At some point in time, I would probably like to be a full-time trader, but one of the things that you will learn is the trading, the strategies, the technical part, the fundamental part, whatever you decide to go into. That's not where that's not where the headache is. That's not where the heartache is. The journey is actually the discipline, uh, the fear of missing out, the greed, um, all that comes into play a whole lot more than any strategy or any actual trading does. And so that's what I'm working on: consistency, discipline, and faith, trust in the process. And so, yeah, if this is your journey, your first start, then I hope you find favor in this and in all of your endeavors. And I just wish you a good journey along the way. So be well and God bless.